Mikio, good morning. Thank you very much for joining us.
Good morning.
What do you expect to come out of this meeting in Athens, which could last as long as 10 days?
Yes, and I guess investors will be quite nervously watching for every bit of headline that comes out of Greece. Actually, I don't expect any, or we don't expect any big news items there in terms of, very negative things. I think the setup is quite clear. There is a commitment from the IMF and the European or the Eurogroup and the ECB as well. And Greece has demonstrated in recent times that it is very well aware that it has basically nothing else to do than to keep on tightening the belts, and that's basically what's going to come out. The market, I think, will essentially will eventually realize and appreciate that the Greek government is, out of a lack of other choices, implementing this very austere program. So but it's going to take some time until we get some confirmation of that.
But discussions will focus on not just the first year. We know the terms of the 45 billion euro loan over and the interest payment of 5%, but we don't know about the second and third years and beyond, do we, Mikio? So yes. I suppose the question is, what sort of deficit cutting measures will the EU, the IMF and the ECB require in return for loans?
Yes, my expectation is that, and actually there have been indications out of Greece from Greek government officials that this is the line they're adopting, is they want to discuss a longer-term plan for which is more not so much just simply slashing spending and raising taxes, but more it goes into the direction of reforming the economy so that you can actually have a sustainable fiscal situation and also some growth going forward. Because without growth, of course, you cannot bring down the debt-to-GDP ratio over the medium to long term. So it's going to be a more structural debate. And for those who are patient, I think the outcome will be good, because the mutual interest from the Greek side and from the European side is basically to get that matter resolved. Not bailing out Greece, not supporting Greece is just going to be very, very costly for everyone, including the Germans. And that doesn't make any sense, not to bail them out, not to support them.
If it's such a certainty, Mikio, that the money will be activated, why then are credit default swaps for Greece at records? Why are bond yields soaring as well?
Well, for in markets there is no such thing as certainty. So of course there is some uncertainty. What I'm giving you is our expectation on how this matter will evolve in coming weeks. So certainly there is uncertainty there. And of course, if you are exposed to Greece, or if you like to speculate on the event, credit default swaps are probably a good way to do it. However, keep in mind that Greece is basically 2% of the European economy, roughly, and maybe 0% of the portfolio of everybody I know, at least most people I know. So it is a very small and thin market, and you have a lot of negative headlines on your way if you want to play these markets. So I think there is a slight exaggeration in these in that market price, and with regards to the Greek situation, to the Greek CDS, or even the Greek government debt market at the moment.
How soon, Mikio, before speculators, as you say, start to turn their attention on maybe Portugal or Spain?
Well, that will depend on, the quality of the agreements on the news flow we get out of Greece. I suspect that even if you have a relatively good outcome, as a theme, it's, the contagion theme in the periphery of the European Union is going to remain in markets, regardless of what kind of agreements they come up with, which is going to keep up pressure on the downward pressure on the euro as a currency. But a downward pressure on the euro is one thing. The risk of a real default in the fringes of the European Union or the euro area is an entirely different matter. First scenario, weaker euro is quite likely in our view. That is our expectation. The negative theme is going to remain in markets. A real default and a real threat to the union as a whole, we don't think it's likely.
Mikio, thanks for joining us today. Mikio Kumada there from LGT Capital Management in Singapore.